What is good, guys? It's Rey-Jay back with another video, and in this one I want to break down what's happening with Tesla, SPY, and a couple of other tickers, and break down what's happening with the economic calendar moving forward, and talk about some very important developments on the charts that could lead to interesting volatility. But before I begin devil's information, before I talk about why the market may see a little pullback very soon before it tries to bounce again, let me just mention a couple of things. I am firstly not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please check out the Moomoo link, which is down below and in the description. If you sign up for Moomoo, deposit $100, you are guaranteed 7 free stocks, and the offer ends very soon, in just 3 days from now. Anyways, when it comes to the markets, I want to talk about something very important that's developing. I believe that the market is in a very critical place. Could it attempt to push a little bit higher? It sure could, but ultimately, I do see a little pullback coming that could actually affect a lot of different stocks out there from Tesla and different indices, and then we might see a bounce after that. So I will end up drawing this out for you guys a little bit later on and kind of talk about what this could look like based off important fib levels and also important ranges that we have. But please remember something very important about the markets. The markets do not solely move based off data, and you always have to remember that. Data is used as a catalyst for these big institutions to move liquidity around, and that liquidity is what causes price action, not to mention, lots of traps and all sorts of different things. So what a lot of these institutions do is, especially market makers, they move stocks, they move the market based off what benefits them best, but based off what their intentions are, based off all these different factors. And if you look at SPY, for example, when we had some data coming out on Thursday after the PMI report and after Nvidia announced its earnings, we got this crazy dump. Right, SPY went from about 533 all the way back down to about 525, only to get bought back up to about 530 after we got the Michigan consumer sentiment data. Now, was the Michigan consumer sentiment data the main reason why we pumped? I wouldn't necessarily say so. I think that it was just used as another excuse for them to pump the market up because we had quite a few shorts expiring on Friday, and they love to squeeze shorts, and that's what's a very common occurrence. So like I said before, it has a lot to do with the options chain, the liquidity moving around, and different factors that affect how we move. And for that reason, I do see something new developing on these charts. So going into next week, we have Cash Curry from the Fed giving a speech on Tuesday. That might cause some moves in the markets. They may try to use his words as an excuse because Cash Curry is known for being the biggest hawk this year. For Wednesday, we have very minor data coming out, like the Fed Beige Book and such. For Thursday, we have the GDP numbers coming out. That's going to be very important as well. Can't wait to see what this looks like because our GDP growth rate is very pivotal for us to understand how close we are to a recession, how the economy is looking in terms of strength, and other factors like that. Now, is the GDP a sufficient way of measuring the economy? I wouldn't necessarily say so. I would argue otherwise, but it is heavily accepted by economists and used that way. So we just have to accept it that way, regardless of how things could end up looking. On top of all of this, on Friday we have the PCE data reports. I don't think PCE is going to be that bad because CPI was decent, so that shouldn't be too horrible. But the other factors could be used as excuses to move liquidity around. So what do I see for SPY? What do I think is going to happen? Well, when we zoom out of SPY, notice one thing that's very interesting is the fact that we have a bearish engulfing candle that formed on the daily time frame, and the daily showing a little bit of weakness. Now, in my intraday video yesterday, I did say the market could bounce a bit. We might see a little squeeze, and that's what happened. SPY did dip and then get a nice bounce. On Friday, we got that move. But please know, guys, I wasn't talking about the next 3 weeks. I wasn't talking about what's going to happen, for the week. I was talking about just that intraday move, which ended up happening on Friday. So now I have to do another analysis for next week. My analysis right now is different from what I was talking about in my previous videos where the market was actually pushing. So with that being said, let me make it very clear that we have this bearish engulfing candle. Typically, we do see the market pull back a bit once we get, a candlestick like that. And I'm going to give you guys some examples. So like right here, this is our first example. We have this bearish engulfing candle. We pushed up a little bit before we continued to fall. We actually dropped about 30 points, 20 points before we ended up bouncing again. So that's one example. Another example is right here. SPY formed. I wouldn't necessarily say this is a bearish engulfing candle, but it was a bearish looking candlestick. We did rebound a bit before we continued lower, and we did end up dipping quite a bit from there. There's another example in July of the year, so I could go all the way back to July, for example. Well, actually, there's one example right here in September. We had a bearish engulfing candle in the 440s, and we ended up dipping all the way down to about 420 before trying to bounce. Right here is another example. This actually looks very similar to our setup currently when SPY was actually rallying really hard. The bearish engulfing candle was followed by a little bit of green for about 3 days and some consolidation before we saw this big drop from the 450s all the way down to about 430. So typically we get 20-point drops when that happens. But with that being said, it doesn't guarantee anything. It doesn't mean we have to drop 20 points or anything like that. But here's how I think things may play out. So we're not going to focus on us dropping 50 points, 100 points, or anything like that, because we first have to look at one key support. SPY has a gap at 523, and there's also previous resistance becoming support at 521. So I'm going to just focus on that level for now. I believe there's a very good chance we might test that. Losing our yellow line right here, the yellow line, our 50 EMA is one sign of confirmation that yes, we could get that dip. So if I were to draw this out, I would kind of look at this level like this. We basically have this 521 zone, so like right around here, it's about 523. This area right here is something worth noting. This whole area is where I think SPY is going to revisit. I think that there's a very good chance of that happening if we establish a lower high relative to the all-time high, or if we get a big rejection once again. So from the way I see this, we could also take a Fibonacci retracement, trying to kind of look at this more effectively as a result. One thing you could kind of do is you could start from this low all the way down here from this like 493 area, which is where we ended up dipping to. From there, wait, hold on. Sorry, guys. That was not my Fibonacci retracement. 1 second, guys. Right here. So taking the Fibonacci retracement, you will find that right about here, we ended up going to this all-time high at 533. The first zone worth noting is the fact that we had this bounce off our 0.236 retracement area. The 0.382 area is actually at 518, very, very close to about 520. So we could see a move kind of close to that. It doesn't have to be exact, but that is something worth noting. If we were to redraw this from the next test down here, then that actually aligns a lot better to about 521. That's where our 0.382 retracement happens to be. But either way, it doesn't really matter. It doesn't have to be perfect. But let me just make it very clear that if SPY were to try to push going into next week, after this bearish engulfing candlestick, we could try to fill this imbalance and eventually make our way back down to these levels. I think there's a very good chance we do revisit 523 to 521. And then once we hit this level, do not turn into a perma bear. If we lose this, yes, we could be dipping all the way down to where our 200 EMA happens to be on the 4-hour time frame, which would probably be around 518. But if we hold this and we get a little rebound, then we could be making our way back up. I personally think that the most likely possibility is we kind of dip close to this 520 zone, then we get a little rebound again back up to 530. And there's going to be a lot of trickery. We're not just going to shoot straight down to like 510 or anything like that. We're going to likely hit 520, that entire range, before we end up getting a little bounce and buyers kind of like come back. So I find that to be very, very probable as the most likely possibility. Now, if we were to try to push a little higher and kind of break the all-time high, which I find to be a little bit less likely here, if we were to try to go a little higher, that could be another shorting opportunity for us to kind of revisit this area in early June before the market tries to bounce again and continue to push. That's how I would kind of view this. I wouldn't necessarily turn into a perma bear. So that's what I see as the most likely possibility. We'll have to see how high SPY ends up going and where we end up peaking at. I don't know if the peak is in yet or not, so that's why you want to be open-minded. But that's what I find to be the most likely possibility. And then for the QQQ, it's the same thing essentially, because when you look at the charts, regardless of how you want to draw out this Fibonacci retracement, we could take it from this low right here and go up to the high. And what you'll find is that we have support currently at the 50 EMA, very, very close to this 450 area. Losing that opens the doors for about 443. And then we also have that gap to fill at 446. So I think there's a very, very good chance that the QQQ does something very similar to SPY. I'll zoom in just 1 second, but something like this, whether we break the all-time high or not, we'll see. But then we will eventually make our way down towards either between 450 and about 446, which is where we have that gap fill. That aligns with our Fibonacci retracement chart very nicely before we try to get a little rebound and kind of continue from there. So that's what I find to be a very, very probable move, at least for the triple Q. We'll see if we break the all-time high again or not. I'm not too sure about that, but I think that ultimately there will be a move coming here as soon as next week. I think we are due for a little pullback because of that bearish engulfing candlestick, which is kind of setting the stage. Because historically, when that happens, we do typically see SPY and the QQQ kind of pull back a bit, and we're seeing some weakness on the daily time frame. So with that gap to fill in the QQQ, I think there's a very good chance we could see a little pullback before we try to rebound. And I think that the market is going to make some very, very interesting moves. So that's what I see for the QQQ. How about for Tesla? Well, Tesla, guys, I'm bullish on Tesla overall. I think temporarily SPY and the QQQ could affect Tesla, cause some volatility here and there, because what's worth noting about Tesla is that we love to hold this 172 area. So that's where we have the support, and also 168. So even if we do dip down to like 168, we'll be completely fine on Tesla. We could still hold it very nicely. And overall, the structure is still bullish because we're going to continue to push, in my opinion, into the 200 area in that June timeframe. We could even go all the way up to about 217. That's actually where our 0.618 retracement happens to be. So I still see a very, very big squeeze coming in June for Tesla. I think it's going to run very nicely. Tesla's green is 78% of the time in June historically. It's the strongest month of the year by far. And there's a very good chance that it will try to revisit those levels. So if I were to take a handy dandy Fibonacci retracement tool right over here and kind of draw it out, you could see that our 0.618 retracement aligns with that 217 area, and it's very likely that we will be approaching that. So, excuse me, I think that we might be reaching that very, very soon, at least in the month of June, for a very, very nice bounce. But before that happens, we might see Tesla temporarily dip, maybe even trade sideways for another week or two, as it's trying to build some very, very nice amount of liquidity over here before it tries to get that little rebound. Now, always remember that this does not mean that Tesla's in the clear for good, right? Things could always shift for the company later on, especially as we get closer to a recession, but this is just a temporary move for the month of June, right? So that's something else that's worth noting. For other tickers out there, another thing that does make me think the market may dip a bit is the VIX. So the VIX, like this is one thing I did that was very important. Look at the weekly time frame on the VIX. Okay, I'm going to fix this up in a sec, guys. But notice that the VIX is currently in the 11s. Okay, if we go back on the chart, this is the lowest we've seen it since 2024, 2023, 2022, 21. We've never seen the VIX this low since 2019. We're at the lowest since 2019. And the only time it was lower than that was back around 2018. And then since then, it's been like years since we saw the VIX go this low. So the point I'm trying to make is that generally, when the VIX is this low, this undervalued, it is going to try to get a bounce at least for 1 to 2 weeks. This means the market may try to pull back a bit for about a week, in my personal opinion, within the next 1 to 2 weeks. So I think the VIX is going to try to get a temporary bounce. Doesn't mean it's going to explode and break out, not necessarily. Just a temporary bounce back up to the 14s as implied volatility increases and the market tries to cool off a little bit. So that's what I see on the technical side. On the technical side of things, excuse me. Do I think the market's going to crash? Not necessarily. We might just get a little pullback before we try to bounce back up. But that's what I find very likely looking at the Fibonacci retracements, looking at our trend lines, and also different patterns. Something else that's worth noting about SPY is when you look at like the hourly time frame, we're also kind of forming a nice little bear flag is also forming on SPY, at least technically speaking. So this might lead to a little break and a move to the downside as well. If you look at this flag, that makes me also suspect that there could be a move coming back down towards the 521 to 523 area, very close to 520 basically. Do I think we're going to crash through that? I'm not 100% sure. We're not going to worry about lower levels until we see how it reacts, but there's a good chance it might actually bounce off that level before anything else. So there's a very good chance we might get a little bounce off that level and try to push back up to 530 after we hit 520. So don't turn too bearish just yet. We'll have to wait and see what the reaction is. But with that being said, guys, I want to thank you all so much for listening. Hopefully this video was insightful for the people out there, for my reasoning behind why the market moves the way it does. And I'll see you guys very soon in just a couple of, well, just about a day from now. All right, so enjoy the weekend, guys. I'll see you guys very soon tomorrow. Take care, and I'll see you guys on the next one. Thank you for listening, and peace out.